Alright, good afternoon everyone. I want to do a quick video here to go over a couple of things. Some of our guys, one guy out in Germany actually had an issue he was talking about. He's doing the APEX funding, and I want to cover one thing for him quickly. It has to do with the risk management and trailing stop. But I also just wanted to invite you all to go to tvtrades.com and take the free trial. Alright, the trial is free for 3 days. After the 3 days, it's either 25 bucks a week, 90 bucks a month, or 997 bucks a year. Either one, but you get 3 free days in the trial. Alright. So far this week, we're up $24,450. That's with 10 contracts. All right, again, go to tvtrades.com. I have to say this at the beginning because somebody has decided to hack my stuff, and they hacked one of the Telegram channels, they hacked YouTube, and they infringed on my copyright of my logo and everything else. So I got to say this first at the beginning of this whole thing. Anyway, the things that I want to show you. 24,450 so far this week with 10 contracts. That's where we're at. But I want to show you some things in here, okay? Now, this is just a span today on the ES7 range. That's what I usually trade the ES on in the morning session, is a 7 range. Now, I picked off all these trades that triggered in this period right here. Right now, I didn't cherry pick the period. As you can see, there are 2 stop outs in that period. The blue arrows are the winning trades. The red arrows are the stop outs. The yellow arrow, and that's really what I want to talk about, those are the break-even trades. Now, the reason I want to talk about the break-even trades with you is because should they be break-even? Should we take a little bit of profit on that? And what should you expect out of a trade? All right, and this right here is a good example of it. I just noticed it's a good example of one, but I'll get into that in just a second. All right, so we had a nice win right there. All you're looking for here is for the trigger to go into the oversold when you have a blue background. Go into the oversold when you have a blue background. You buy the open of the next bar. You see, we would have bought the open of that bar with a 10-tick stop. You would have stopped out right there. Bought the open of that bar, bam, profit. Right here, profit. Right here, it pulled back a little bit, but then profit. Right here, profit. Right here, you would have sold the open of that bar because it went into the overbought. And you had a red background, so you sold the open of that bar, profit. Over here, you would have bought the open of that bar, and it would have stopped you out. It would have went back and forth a little bit right here, but it didn't go enough to get your stop to break even. All right, it would have stopped you out. Then this one right here, after a stop out like that, I might not have even taken this trade because it's the same direction, but let's just say you ignored that stop out and you had this trade right here. Now, when do you move your stop to break even? Well, my risk management strategy says to move the stop to break even after, excuse me, after you get 4 ticks in profit with the ES on this time frame, after you get 4 ticks in profit. Okay, this is my risk management strategy right here. This is how I use it. Now, it doesn't matter what market you're on. It depends what size range bar you're on. So for a 7-tick range bar, you have a 10-tick stop that trails break even after 4 ticks in profit with a 30-tick target. Now, I typically exit my stops with a trailing. I exit my trades with a trailing stop. All right, and this one would be no different. I'd exit my trade with a trailing stop. Well, this one would have stopped out, but this one would have stopped out. This one with a trailing stop. Now let's take a look at that a little closer here. Okay. The markets are always doing the same thing. All right, they're always doing the same thing. This is just a little bit of education about the markets, right? They're always going up and down, and then they go up and then they go down, and then they go down, and then they go up, and they don't quite make it to the prior swing high. That's indicative of a trend change, right? They go down, and then they go up again, and they don't quite make it to the prior swing high. Well, then you change directions, so you start going in the other way, right? And that's all well and fine. But how do you trade that? You know, if you have a signal like this, let's ignore the one that I stopped out on right there. This stop out signal right here. Let's just ignore that, and we'll go with this one right here. Let's get the little vertical lines off of there too. When you get into a situation like this right here, this is all that you see, is this right here in real-time market. All right, so price comes down here, gets into the oversold. You know you're going to buy the open of that bar. So you buy the open of the bar right here, buying the open of this bar right here. Now in this case, this would have actually not been a break-even trade. I would have gotten some profit out of it because these are 7-tick range bars. So according to my risk management strategy, I would have bought my stop to break even. And then I probably would have taken some profit when I got up here to probably 10 or 12 ticks. I would have taken some profit on that. But let's just talk about the way you should do this anyway. All right, let me slide this completely up out of the way so we have something to draw with. All right, so the markets are always going up and down, and typically the way that they're going to move, they're going to go up like that, they're going to pull back roughly 50%, and then continue another leg up that's just like this, okay, just like that. So what you would have is a repeat of that leg right over here when it starts going up again, okay? This is just education about the market. The minimum that you should expect out of a trade is for it to get from here to here. So if you are in a trade, and this is for the APEX and the TopStep guys, who I know you have drawdowns, and I had one of our guys had a whole bunch of break evens. He's getting his goal for the day every day, but but he's having a lot of break-even trades, and he's wondering if he should be taking some profit in here. Well, here's the deal. This is the way that I manage it. All right. When you get into a trade, you get your stop to break even after you get your 4 ticks in profit. As price approaches this prior swing high, that is an area right there where it's going to find resistance. The first resistance should be right there at that area. I trail my stop close when it's like that. So I'm locking in profit, trailing my stop close. If it breaks through that, that's probably when you're going to get your goal for the day. Usually there's enough room between here and here to get your goal for the day. But if it breaks through that swing high, then you trail your stop up to the swing high, all right, and let it run a little bit, because this is now going to become support. When it goes up here and it comes back down for the next leg up, that's going to be support, all right? So you let it run, and then when you see it get up probably about this distance right here, up like that, you trail your stop up pretty close because it's time for it to pull back, right? Now the way that our stuff works, you're probably going to get another entry down here for the next leg up, right? That's the way that I do it. So in a nutshell, that was it. That was all my reasoning. But when you have a trade, you get in, like let's say you're getting in right here. You get in right here. When it gets up to here, you trail your stop really close, start locking in profit, okay? Even if your target is up here, start locking in profit really close right here, all right? Because it's going to hit some resistance there usually and pull back, all right? That was it. I wanted to keep this a pretty short video, and this is pretty short. Again, if you haven't taken a free trial with us, go to targetviewtrades.com. Targetviewtrades.com. On this page right here, click this. You bring you all the way down to the bottom. It's $25 a week after the free 3-day trial, or $90 a month after the free 3-day free trial, or $9.97 a year. Take any one of those, and we'll get you rocking as soon as we can. All right. Thanks for watching.